that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so.
Idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before.
The problem with Bitcoin is it is so slow. It's like the mainframe programming of the past. In
today's State of Crypto, Raoul Pal explains the value Bitcoin has due to its scarcity and how it is human nature to tend to inflate currencies. Kevin OLeary gives his thoughts on leverage risks. And is Bitcoin a thing of the past? Is that what Charles Hoskinson believes?
What is it that makes Bitcoin interesting enough that so many smart people see this as ultrasound money? And what does ultrasound money mean?
The world has a history of money, whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money. So the Romans used to clip the edge off the coins so there was less gold in each coin. And eventually people would lose faith in the coins because they blend them with silver and then blend them with copper. And, the coins were worthless because that was supposed to be worth the value of the denarii in Roman times. But governments can't help themselves. Humans, we're just humans, right? Humans are fundamentally flawed creatures and we always will be. So then we have these gold standards, the US and the UK are on gold standards, World War I, World War II, we all have to leave it because we've got too much in debt again. We've overly financialized yet again because humans love leverage above all things. It's kind of sex and leverage are the two things that drive humans for some reason. Then we adopt a new system, which has been around before, but it keeps getting abandoned, called fiat money. Fiat money is money not backed by anything. It's backed by the promise of the central bank paying it. So that's the dollar bill that we all are familiar with. And every country in the world now adopted fiat currency. But as with everything, if you're really thirsty and I gave you a bottle of water or sold it to you, you'd probably pay me 10 times too much for that bottle of water. If I give you 1 million bottles of water, they're worth precisely 0 to you. So scarcity has value. That's art, that's cars, that's almost anything. Humans value scarcity for whatever reason we do. And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500, I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate, same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't.
And next, we have Kevin OLeary explain why certain companies going out of business is a positive event for crypto.
specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry. And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them. And that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news.
And if you are a Bitcoin investor, hopefully the next clip can help you decide if you should diversify or stay invested in Bitcoin only. Here is Charles Hoskinson.
So the problem with Bitcoin is it is so slow. It's like the mainframe programming of the past. And it's the only reason it's still around is because there was so much invested in keeping it around that we just kind of have to leave it there. And one day COBOL will die. There's nothing about it from a collection of USPs that's particularly desirable. You have extremely long settlement time. You have extremely low programmability. It is not aware of any other system. There's no native way of issuing an asset in that system. You can't even do a pull transaction. I mean, you can't do anything that's interesting or unique there. And yeah, all due respect, it's, mafia, all due respect, Tom. All due respect to the Bitcoin people. It's like an amazing, incredible first generation thing. And we're all here because of Bitcoin. Mm-hmm. But the problem is you have to upgrade the damn thing. Just because you were a high school football star doesn't mean that 30 years later, you're still a high school football star in the same shape. You got the beer belly, you're old, you're not doing this thing again. And that's what Bitcoin has to do. There's fundamental improvements that I think Bitcoin can make at the protocol level that would actually make it an incredibly competitive system. Like if they wanted to keep Nakamoto consensus, proof of work, there's ways to enhance proof of work. I mean, Amin Gansir did this with Bitcoin NG. Pramod Viswanas did this with Prism. Make it 10,000 times faster, and you don't compromise the fundamental security assumptions that the system has. You can add programmability to it. Blockstream created a language called Simplicity. So there's actual ways to extend, and we did this with Cardano with the extended UTXO model. There's ways to extend what Bitcoin has, keep the philosophy, the accounting, the way of thinking about transactions, but then suddenly you can now do DeFi and other things. But what they've done is said, we will not evolve the base layer at all, and we're just going to build all this layer 2 stuff, which is usually highly fragile and centralized and requires enormous effort at the base level to do anything. It's not a coincidence Vitalik started as a color coins guy and a master coin guy hanging out in those circles. He was trying to innovate and do things in Bitcoin, and it was so hard and difficult that he started diverging and going and doing things in a different system entirely. I knew the Mastercoin guys, JR, and all these people. They were maximalists. They really wanted to build something cool and exciting for Bitcoin. And anything they did, the developers would attack them. It's, you're misusing op return. You're doing this, that. It was a holy war anytime you wanted to evolve. So I think it's its own worst enemy. It has the network effect. It has the brand name. It has the regulatory approval. But there's no way to change the system, even correcting obvious downsides in that system. Now, what's really cool is Ethereum doesn't suffer from that problem. It's getting to a point where it has a similar network effect to Bitcoin, but the community there is completely different in culture they love evolving. They love upgrading, sometimes a little too much. And so that means that if you look at the trajectory of things, if I had to bet just those two systems, Bitcoin or Ethereum, I would say 9 times out of 10, Ethereum is going to win the fight against Bitcoin if it was the only competitor. But obviously we're here and a lot of other people are here. So there's different things going on. So it's a much more complex game.